So welcome back to the channel, guys. In this video, we're talking about the potential rug pulls on the crypto industry. But at this moment in time, things look like, well, I'm cautiously optimistic, let's put it that way. I don't think some of the scenarios that are worst case scenarios, some of the issues we've been faced with are really playing out in a negative sense right now. There's quite a few things to be optimistic about. And this week is obviously a big week. We've just got over one hurdle with the EU's proposed ban of proof of work mining scrapped. And now we have hurdle number 2, the FOMC meeting, which is tomorrow. And at this moment in time, we find ourselves with a BTC price at around 39,100 and some change. We did spike up to 39.9 just yesterday. But as you can see, we've been consolidating in the high 30s to maybe low 40s, a bit of a bull bear line in the sand at that 40k region, which has been played out a few times here with some spikes to the highs and then subsequently breaking down back below 40k afterwards. But price has been held in this region, which makes me quite optimistic due to the fact everything, including the kitchen sink, has been thrown at the market. World War III potential, huge amounts of inflation, commodity prices going through the roof. I'm sure most of your household bills like mine have gone up almost double. Just crazy, crazy events. Yet we still find ourselves here at around 40k for BTC. So it seems like if we were going to break, maybe it would have already occurred. I'll go into one of the things later in this video that could break the market. But let's just look at these one by one and chalk them off. So first and foremost, EU sweeping crypto reg package, one step closer to ratification. Essentially yesterday, the EU met on this proposed ban of proof of work mining. They're trying to regulate the crypto industry, and a ban to proof of work mining was one of the amendments in there, or one of the areas that could have been passed. But this proposed framework was voted through without a contentious provision seeking to limit the use of proof of work. So of course that'll be very bad. There's a lot of miners, people independently doing mining, but also a lot of companies in, say, Scandinavia, where they have low energy costs and quite cold environments. There's some big industrial units that mine BTC on a huge scale out there. So this would be very bad for a load of businesses if this was to go through. But the committee voted to remove a provision that sought to limit proof of work. So this rule could have in fact banned the popular cryptocurrency BTC across the EU. I think this is an erroneous statement to make. I don't see how you can ban the use of Bitcoin by banning proof of work, as it's my understanding that this was mainly about banning the actual proof of work miners in the European Union, not people who are utilizing a network that utilizes proof of work. Like, what would you actually do with that? How are you going to shut down my independent Bitcoin wallet as a resident of the European Union? It doesn't make a lot of sense. So not to bash on this article anyway, but I think this was maybe a bit of an overstated sentence there. But instead, the committee voted in favor of an alternative provision with the goal of reducing high carbon footprint of cryptocurrencies. Essentially, they want to go green in the European Union. We've known this for a long time now. And of course, proof of work does expend a lot of energy. And so, of course, it's going to come under criticism. So proof of work has come under this criticism from regulators and politicians around the world over energy concerns. And some EU leaders are concerned that renewable energy may be channeled into sustaining cryptocurrencies like Bitcoin instead of national use. So it seems like they're even annoyed if we were to utilize renewables for mining Bitcoin, as maybe that takes away from powering a few homes here and there. But essentially the argument against this is there's a high likelihood when there's financial incentives to mine BTC, if you're going to start upgrading renewables, we're going to probably advance the tech underlying renewable energy production as a result of BTC. So I would say efficiencies will come to renewables due to the fact people want to profiteer off of Bitcoin mining. Of course, you can see all these things either way, but in my mind, there would be a lot of benefits to just regulating the mining of BTC and maybe saying, look, you can only mine it in the EU if it is through green methods. I think that would be fine. But as we can see from this closing paragraph as well, European Parliament members stress that other industries, i.e. video games and entertainment industry, as well as data centers, also consume energy resources that are not climate friendly, and they call for the Commission to work on legislation addressing these issues across different sectors. Of course, they're not going to ban you from playing video games because it causes high usage of data. That just simply is never going to happen. Similarly, it looks like we're going to get the common sense approach, not banning proof of work. So this was a major hurdle, a lot of fear around this yesterday, but we have passed the test. Next up here we have this: Saudi Arabia in talks to price its oil sales to China in the Chinese yuan. Would make some sense. They do a lot of trade between these two countries, and this would actually weaken the US dollar as the world reserve currency. If we're starting to see sales in the yuan for oil, maybe the Russians will also jump on board with this as well. So what has happened here today is we've seen a bit of a rejection here from the highs on the DXY. The dollar index is put in pretty much a double top here and it's having a bit of a retracement. Long term, this chart is super bullish, and we know that when this is trending up, typically it's not good for risk assets such as Bitcoin and crypto. But today, with this kind of news story coming in, the DXY's having a bit of a pullback here. So if this does weaken the dollar, this is good for risk assets in general, and I would suggest we have maybe some breathing room for cryptocurrencies at large to do okay. Also, we're seeing crude oil prices down quite a bit. So the inflation fears of huge, $150+ per barrel oil, the knock-on effects that would have are obviously very, very bad. But we're seeing that negative price action, that huge run-up in WTI crude oil come up to $123 March the 8th, but it's coming down and looks like an altcoin chart here, just topping, retracing rather heavily here. So this will be a positive to the inflation figures. And I think we've seen Jerome Powell state that there could be the one-time shock due to some of the inflation resultant from the issues with Russia and Ukraine, i.e. this oil price. In terms of the escalation around Russia-Ukraine, we're seeing some softening of tones as well. These kind of reports were not there last week. We were seeing that when there was negotiations, it was, didn't go very well, that kind of stuff being fed back. But here today, we have this first one, Ukraine President Volodymyr Zelensky stating that Ukraine needs to recognize that there is not an open door to NATO membership. So taking a back foot here and saying, look, we know NATO is not on the table for us. This will appease the Russians. And then secondly here, the Ukrainian negotiator says talks with Russia resume, discussing a ceasefire and withdrawal of troops. This will be good for the markets. We want to see a quick resolution to this issue. We do not want this to escalate further, as the knock-on effects to the supply chains, to corn, wheat, oil, etc. are going to be absolutely ridiculous and rather troubling, to be honest with you, once you look down the line and see how things can turn out. But here we're seeing today the S&P is up a little bit. It has been getting nuked, as has the Nasdaq, but the fact it's opened and is showing a little bit of strength here, up almost 2% on the day. I think we're starting to see a little bit of tide turning, at least on the short term. Then of course tomorrow, FOMC meeting, Jerome Powell will announce the rate hike, and we're all expecting it to be 0.25%, i.e. 25 basis points. Last week in a congressional testimony, that was back last Wednesday, I believe, Jerome Powell made it clear that a rapidly healing US economy no longer needs such an accommodative monetary policy, and the central bank would begin raising interest rates on the March 16th, i.e. tomorrow's meeting. At that conclusion, we will see exactly how this plays out, but it's expected, as Powell indicated, he supports a 25 basis points increase, but noted the Fed could move more aggressively if inflation does not abate as expected. And we're seeing, as I said, WTI crude oil coming down quite aggressively here. So maybe the major moves for inflation have just peaked, and now we will see the back end of this. And with regards to Russia-Ukraine, it's brought about a significant degree of uncertainty for monetary policy. The door's well and truly open to having pretty much anything on the table here. They even talked about price capping in the US, which is a crazy thing to even wrap your head around. That would be the death of free markets. So some of the potential rug pulls in the market seem to be abating slightly. This is the major one that people are trying to suggest this is what would cause our big nuke, maybe mid-20s for BTC, and of course your altcoins getting absolutely hammered if that occurs. Russia scrambling to pay its way as prospect of a messy default looms large. So if Russia does default on its debt payments, this is where we can get that kind of contagion across markets and things can get very, very ugly. So some figures and information here. Among the possible consequences of the sanctions regime imposed on Russia that many in financial markets are watching for closely is the prospect of Russia defaulting on its debts. So one of the big three here, Fitch said last week a Russian default was imminent. Okay, that's pretty ominous. Managing director of the International Monetary Fund also says on US TV at the weekend that a Russian default could no longer be regarded as an improbable event. So Russia defaulting on its debt, that kind of rug pull which would have contagion throughout the markets is on the table. At this moment in time here, Russia owe roughly 117 million in coupons on 2 of its government bonds, both denominated in US dollars. It has a grace period of 30 days in which to make these payments, taking up to the 15th of April to do so. A further payment though of 359 million is due on the 31st of March, and a further 2 billion becomes payable on the 4th of April. So this gives us a bit of breathing room until these dates really hit. And I'm really concerned not about the M's, but the B's here. Millions, something the markets, obviously not very good for markets, but we could absorb. But when you have multiples of billions in default, you really are going to see that contagion effect. So this is what I'd be most focused on. And this is why I think we could get a really bad sell-off across all markets if this does occur. And then we really will need bailing out from central banks once again. That kind of March 2020 style event would take place. But overall, right now, we're seeing extreme fear in the market. 21, we were at 23 yesterday, so even more fearful as of today. Peak fear in the markets, but as I say, I think things are slightly abating here, and we have a bit of a window where risk on could be playing out. So I think, for me personally, just on a personal note here, I'm going to be adding to a few positions just for some short-term trades over the next couple of weeks, and I'll probably do some purchases later on this evening. Further to this as well, I wanted to cover this piece of news here. South Korea's incoming president vows for a big cryptocurrency push. So brand new president in South Korea, Yoon Suk Yeol, will now take office in May. And this guy is super bullish on crypto. South Korea, also the home of Terra. So victorious last week, Yoon has promised to allow initial coin offerings, ICOs, which are banned currently by the previous regime, as part of his broader cryptocurrency pledges. He's also vowed not to impose taxes on crypto trading gains of up to 50 million won, which is 40,000 US dollars, treating them as stock winnings. Yoon's proposals were welcomed by crypto advocates who expect obstacles to be removed and the door open to increased opportunities in blockchain technology-based assets. This is bullish for the crypto industry in South Korea, of course, a huge market. We know Terra are already out there. That will be bullish for Terra. I have no doubts for that as well. And people do move where they're treated best. And I think we're going to have a real scramble for talent in this industry. As when you have friendly regulations coming in and opportunities to pay less tax, you're going to get the brightest minds move into these countries. So this is very forward thinking from this incoming president. And I think this is actually bullish news for Terra. Over the last week or so, Do has been exceptionally bullish, to say the least. Remember when lunatics were asking when Busan, that is the second biggest city in South Korea, maybe now Busan, with this guy stepping in. This relates to some speculation back last year around Busan City to implement Terra stablecoins for its official digital payment system. The article is here, just a small snippet from this. So this article has been translated into English here, in which they call Busan a blockchain specialized zone. A movement of change is being detected in Busan, which has been criticized for being a half blockchain based experiment site. And in this, it says, according to a member of the advisory group, on the same day, there were mentions of using blockchain company Terra's stablecoin to establish a digital asset exchange for the local currency Dongbakjeon. So we're already seeing the big adoption of UST, the dollar stablecoin, but how about the Dongbakjeon stablecoin over in Busan potentially getting used en masse with millions of citizens? Again, this will further boost the overall ecosystem, and Luna would be the value capture token in this relationship, just in the same way that UST to Luna is. So this could be super bullish news for the Terra ecosystem with this incoming president, and it kind of, for me, lines up with Do just getting exceptionally bullish as of late. Of course, this is wild speculation on my part, but I'm just putting together a few dots here. And then today we had some more good news I want to quickly cover. LFG Council has voted to burn another 4 million Luna to mint roughly 372 million UST, which will be used to acquire exogenous collateral. So what will that be? Will that be Bitcoin or other things? Could it be other crypto assets, maybe Ethereum, something like that? And once this burn is complete, LFG's non-Luna reserves will roughly sit at a value of $2.2 billion, as well as having 8 million Luna remaining for future growth. So the bullishness just extends. Previously as well, where it says master of stablecoin, hashtag Luna, it previously used to say master of stablecoin at Busan, which is that second biggest city in South Korea. So that's pretty much my take on the potential rug pulls in the market that we seem to be getting over slightly right now. Don't want to get too ahead of ourselves. Of course, there's a major rug pull event if Russia starts to default on debt payments. But I do think we have a bit of a window of opportunity here. And there's some positive news out there if you do go looking for it. I hope you enjoyed this one, folks. If you did, smash a like on today's video. Drop me a comment down below. Let me know what you liked. Let me know what you didn't like as well. And I'll see you in the next one. Goodbye.